The United States, the world's biggest debtor, is in a tough spot. It's leaning hard on its allies, think Canada, Europe, and Japan, to keep pouring money into its economy to prop up its massive debt. What's wild is how little the US seems to care about the economic fallout for these allies. Today, we're zeroing in on the brewing tension between the US and Japan. The Trump administration is turning up the heat on Tokyo, demanding more cash and cooperation. But Japan's had enough. They're pushing back, and the White House's message feels less like a friendly ask and more like a threat. Tank your economy, or we'll do it for you. Japan, though, isn't just sitting there. They're planning a bold countermove that could shake up global trade alliances and even threaten the US dollar's dominance. If you're fed up with watered-down news that skips the real story, hang with me. We're diving into the numbers, the behind-the-scenes power plays, and what's really at stake. Let's break it down. The US is in a financial mess. Its trade balance is crumbling, with a current account deficit at 3.8% of GDP, about $1 trillion a year, according to the Bureau of Economic Analysis. That's a fancy way of saying America needs a constant flood of foreign money to keep the dollar from crashing. But here's the kicker. Countries like Japan are losing faith. They're tired of bailing out the US by snapping up Treasury bonds to fund America's bloated budgets. Take the latest $22 billion 30-year Treasury bond sale planned for 2025. The last auction was a wake-up call. US domestic buyers only covered 14% of it, down from a 6-month average of 17%, per the Wall Street Journal. Foreign investors, including Japan, are pulling back too. Data from the New York Fed shows foreign central banks holding the lowest levels of US securities since 2017. This trend, sometimes called de-dollarization, is bad news for the US economy. Why the pullback? Well, foreign central banks are diversifying, buying gold, euros, even Chinese yuan instead of US bonds. This isn't just a blip, it's a sign of deeper trouble. The US dollar has stayed king because the world trusted and bought dollar-based assets, but that trust is eroding. About 85% of central bank managers say US sanctions are making them think twice about holding dollar assets. On top of that, the US government's borrowing is out of control, with deficits expected to balloon by over $3 trillion soon. That's making people question whether US bonds are still a safe bet. And it gets worse. The dollar's already taken a beating, dropping 10 to 11% in value in 2025. For foreign investors holding dollar-based assets, that's a painful hit. Japan's looking at this mess and saying, why should we keep propping up a system that's screwing us over? Their next move could change the game, and not in America's favor. Foreign investors, who hold about 30% of the US Treasury market, are starting to back away. If they pull out entirely, the US would have to lean on its own citizens or the Federal Reserve to buy up its debt. That could mean printing more money, which would tank the dollar's value and send inflation soaring. Higher Treasury yields would also jack up borrowing costs, squeezing the economy. A weaker dollar? That means imports get pricier, hitting Americans where it hurts, everyday goods like groceries and gas. Worse, this shift signals the US is losing its grip on global influence. Heavyweights like China and Japan are dumping US bonds and snapping up gold instead. This de-dollarization trend could make it harder for America to borrow cheaply and maintain its global clout. Some call this a temporary blip, but the signs point to a deeper, long-term problem. To turn things around, the US needs to rein in its runaway spending and rebuild trust with other nations. If it doesn't, we're looking at a weaker dollar, higher prices, and a less dominant America on the world stage. The situation is serious, and action is overdue. Right now, Japanese pension funds are leading the charge, shifting their investments to euro-denominated infrastructure bonds. Why? Because US inflation is expected to climb well above the Federal Reserve's 2% target over the next decade. Add to that Trump's 2025 stimulus plan, which the Congressional Budget Office says will balloon the federal deficit by $2.4 to $2.6 trillion. With US debt already at a staggering 122% of GDP, America's running out of buyers to keep the show going. So, what's Washington's response? Instead of cutting back, it's turning the screws on Japan, demanding they hike interest rates to strengthen the yen. The Treasury's June 2025 exchange rate report didn't pull punches. It called on Japan to tighten monetary policy to fix the trade imbalance. In plain English, Make your exports more expensive so US goods can compete. Sounds fair, right? Not so fast. Japan's economy is already on shaky ground. In Q1 2025, GDP shrank by 0.7%, exports dropped 0.6%, and household spending, over half the economy, flatlined. These aren't just numbers. They show an economy too fragile to handle more pressure. Take Toyota, Japan's economic giant. It took a $1.3 billion hit in April and May alone due to Trump's 25% tariffs on Japanese cars. The company's now staring down a 20% drop in annual earnings, over 1 trillion yen in operating income wiped out. Mazda's in such a panic it delayed its earnings forecast entirely, blaming US trade uncertainty. Trump's supporters argue he's just leveling the playing field. But to Japan, it feels like a one-way street, with the US calling all the shots. Now let's turn to Japan's bond market, because this is where things get truly alarming. Japan's debt-to-GDP ratio stands at a staggering 236%, the highest among developed nations, according to the IMF. The Bank of Japan, BOJ, owns roughly 80% of its own government bonds, and its balance sheet has swelled to an eye-popping 126% of GDP. For years, Japan kept interest rates near zero through a yield curve control policy to manage this massive debt load. But that changed in 2024 when the BOJ ended the policy. By January 2025, rates had crept up to 0.5%. Then came the shock. In May, 30-year Japanese government bond yields hit 3.1%, the highest since 1999, while 40-year yields surged to 3.635%, according to Reuters. Why the spike? Markets expect the BOJ will be forced to raise rates further, partly due to US pressure, and partly because Japan is planning a major fiscal stimulus ahead of its July 2025 upper house election. But if yields keep climbing, Japan's bond market could unravel. Higher yields mean huge losses on the BOJ's massive bond holdings, and with negative yield spreads already squeezing its balance sheet, a sharp could spark a full-blown financial crisis. Deutsche Bank estimates Japan would need a 20 to 25% yen appreciation to meet US trade goals. Such a move would devastate exporters like Toyota, already hit hard by tariffs, and could plunge the Japanese economy into a downward spiral. You might wonder, why doesn't Japan just refuse? They're trying, but it's complicated. BOJ Governor Kazuo Ueda has warned that household consumption is too weak to withstand aggressive tightening. Inflation is above the BOJ's 2% target, but it's driven by painful necessities like fuel and food, not strong demand. A stronger yen might reduce import costs, but it won't revive consumer spending. In a fragile economy, tightening policy could do more harm than good. May 2025 Reuters poll showed that 68% of Japanese economists recommend the BOJ hold off on further hikes until trade disputes are resolved. Behind the scenes, officials are even considering delaying bond tapering beyond Q4 2025 to avoid market turmoil. Meanwhile, Washington is anything but united. Treasury Secretary Scott Bessent, Commerce Secretary Howard Lutnick, and U.S. Trade Representative Jamieson Greer can't even agree among themselves. According to Bloomberg, talks with Japan were temporarily suspended after internal U.S. infighting derailed negotiations. Japanese officials are growing increasingly frustrated, saying it's impossible to respond when America's stance keeps shifting. Washington's mixed signals are starting to take a toll. Japan is losing trust and quietly rethinking how much it can rely on the US as a dependable partner. And here's where things get really interesting. Japan isn't just sitting back and taking hits. They're planning a counterstrike that could reshape the game. Instead of bowing to US pressure, Tokyo is turning to the Comprehensive and Progressive Agreement for Trans-Pacific Partnership, CPTPP, to rewrite the global trade playbook. This 12-country pact is something Japan kept alive after the US walked away from the original TPP in 2017. And guess what? It's paying off. In Q1 2025, Japan's exports to CPTPP nations surged, especially to the Middle East, where shipments jumped 17%. Japan even inked new trade deals with the UAE to cut its dependence on America. Meanwhile, car exports to Mexico and Canada are booming. But Japan's not just making noise, they're sending a message. And it's a big one. They're hinting they might use their ultimate trump card, that $1.1 trillion stash of US Treasury bonds. At first, Finance Minister Katsunobu Kato played nice, saying they'd never weaponize those holdings. Fast forward to May 2025, boom. Kato flips the script, putting those bonds on the table. Translation? Japan is ready to play hardball. If they actually start selling, it would be a nightmare for Washington. Skyrocketing US interest rates, a plunging dollar, chaos on Wall Street. Remember the Treasury sell-off scare in April 2025? That would look like a warm-up act compared to what Japan could do. Sure, Kato tried to walk it back later, saying there's no plan to sell yet, but the warning shot was clear. Japan's done playing the quiet ally. Prime Minister Shigeru Ishiba has made this personal, calling it a fight for Japan's national interest. And with a July 20th, 2025 election looming, he needs to show voters Japan won't be bullied. The stakes? Massive, because cars are the backbone of Japan's economy, and US tariffs are squeezing hard. Negotiators like Ryo Akazawa are working overtime, offering sweeteners like access to agriculture and natural gas, but Trump's team isn't budging. It's a standoff. And Japan is waking up to a new reality. America may not be the friend they thought it was. So how's Japan protecting itself? The Bank of Japan is keeping interest rates ultra-low to cushion the blow of a weaker yen, which tariffs are pounding. They've intervened in currency markets before, in 2022 and 2024, and they're ready to do it again. Meanwhile, Japan is doubling down on US investments, hoping to keep at least a little goodwill alive. One thing's for sure, Japan isn't backing down anymore. They're playing the long game, and this time, they're playing to win. Let's be honest, this isn't just about trade anymore. For Japan, it's about survival. And they're not just sitting quietly in the corner. Here's the real disaster in the making. Trump's wrecking ball approach. These tariffs aren't just hitting Japan's economy. They're tearing apart a decades-long alliance that has kept both nations strong and stable. Remember, Japan has been one of America's biggest foreign investors and a critical partner in the Pacific, especially when it comes to countering China's growing influence. But now, Trump's America First obsession is forcing Japan to rethink everything. Social media and export circles are buzzing with frustration in Tokyo. Some voices are even saying it's time to cut ties with the US and go solo. And Japan has leverage, big leverage. If they start dumping their $1.1 trillion in US treasuries, it won't just hurt Japan. It'll be a nightmare for the US economy. Trump is burning bridges that could take years to rebuild. And this isn't just about trade partners. Japan is a cornerstone of global stability. By picking this fight, Trump is leaving Japan with no choice but to put Japan first, and they have the financial muscle to make it count. If this escalates, the fallout could be catastrophic. Interest rates could soar, markets could crash, and the global economy could tilt overnight. And if that happens, the US will only have itself to blame. So what happens if Japan makes the next move? The entire balance of power could change, faster than anyone expects. Thanks for hanging out. If you enjoyed the video, smash that like button, subscribe for more, and hit the bell so you never miss an update. Got thoughts? Drop them in the comments. I love hearing from you. See you in the next one.